I appreciate everybody for stopping in to watch this video. Be sure to hit that like button and subscribe to the channel. Today we're going to be talking about how to read price action and focusing on intraday scalping. This is going to be a step-by-step guide to learning how to read price action and finding A+ setups as well. So the key concepts that we're going to talk about today is IPDA data range, liquidity market structure shifts, order blocks, fair value gaps, and using retracements for precision entries. This is a step-by-step guide to finding A+ setups and reading price action and learning how to get better with technical analysis. So the interbank price delivery algorithm is essentially looking back in the market 20 to 40 to 60 day intervals, right? This is a matrix that analyzes the market by using price and time as variables. Using the IPDA is important for developing an effective trading strategy because you always need to know where you're at in the market. And also, this is going to allow you guys to find the liquidity, right? It's going to allow you to look back in the market, find the liquidity, find the fair value gaps, right? And it's going to give you a lot of great information, right? So like I just said, the IPDA is a 20 to 40 to 60 day look back. Normally, I only go about 20 days back into price action. But if you can't find anything on a 20-day range, go back to 40 days or 60 days. So let's talk about understanding liquidity. Liquidity pools are areas where stop loss orders accumulate. These pools often rest below equal lows or above equal highs. Price is drawn towards these levels, creating opportunities for scalpers or pretty much, honestly, any type of trader. It could be scalping, it could be intraday traders, it could be swing traders as well, but we're going to focus on scalping. So in order for you to find liquidity zones, you are going to look for swing highs and swing lows. Notice in this 20-day range, I pointed out a swing high and a swing low for you guys. Notice how I'm not going too far back into the market. I'm only going to go about 3 days back into the market. And also this process works on all time frames. You can use it on the 15-minute to 30-minute. Mostly I like to stay on like the 4-hour or the 1-hour time frame, but you guys can figure out what works best for you. So after you mark out your liquidity zones and know where you're at on the charts, the next thing you're going to want to do is identify the range that you're in. In trading, a range is the difference between a security or index's highest and lowest points over a specific period of time. Ranges are used to indicate volatility and are marked on charts as the high and low points on the candlestick or bar. So I'm going to give you guys a few examples of ranges. Okay, so this is the same chart that we've been looking at since the beginning. Notice how I marked out my liquidity zones. And now the next thing I'm going to want to do is figure out what range am I in, right? So I have the daily and the 4-hour liquidity marked out in this range so far. You can always go a little bit deeper if you drop down into lower time frames. But as I told you guys, I'm trying to teach you guys how I trade, and I'm trying to give you the best advice for beginner traders, right? So here's the range that I am in right now. This is one of the ranges that I would identify personally if I was getting ready to, try to figure out where I can possibly find a trade at. Notice how it's a range because the market has not broke above the swing high or below the swing low. So as long as we're in this range, we're going to always refer to this range. Also, when we look at the 4-hour time frame, notice how we have a swing high to swing low right here on the 4-hour. Also, this is another range. So we have a range within a range. Notice how the market has not broke below that swing low on a 4-hour liquidity. So this range is still valid. And notice how it did not break above the swing high, right? So this is the range that we're also in. So technically we are in 2 ranges right now, right? This is the range that's on the 4-hour time frame that I want you guys to pay attention to, because I know this can be very confusing for beginner day traders, especially when you're just learning how to use the Fibonacci tool. This is the one thing that confuses people the most. They always wonder, where do I put my Fibonacci? Do I put it on this range? Do I put it on a smaller range? And this is why I try to tell beginner day traders to focus on the higher time frames, because it's less confusing. The next thing we're going to talk about is market structure shifts. A market structure shift occurs when price breaks previous support or resistance levels. Identifying these shifts allows scalpers to anticipate directional moves. Combine that with liquidity sweeps for high probability trades. Market structure shifts are the most effective, right? Most important on the higher time frames, the 4 hour, the 1 hour, the 45 minute, or the 30-minute time frame. And obviously you can use it on the daily chart as well. So how do we find a market structure shift? Well, the first thing you have to do is identify a swing low. I currently dropped down to the 30-minute time frame on this chart. You guys, I did not want to add all of the time frames in the photo because I want you guys to mainly focus on what I'm showing you on this photo. So I dropped down to the 30-minute time frame. Notice how we're still in the same range. And I'm pointing out this 30-minute swing low to you guys. Notice how this swing low right here is a swing low is created when a low is lower than the other surrounding prices in a given period of time. A swing low's opposite counterpart is a swing high. But in this photo, we're only going to focus on the swing low. When a swing low is broken in market structure, it signifies a potential shift in trend direction, typically indicating a bearish reversal in a uptrend as the price moves below a previous established significant low point. This is going to be a good signal for you as a trader to realize that the market is now potentially reversing, so you can now shift your thoughts from buys to now sells, and this happens on all time frames. Okay, so now we're going to talk about how to use the Fibonacci tool, right? When you're using the Fibonacci tool, mostly it's to find premium and discount zones. I talk about this in other videos. Make sure you guys go check those videos out. Some people do use the Fibonacci tool for entry points as well, and there's nothing wrong with doing that, but you have to couple it with everything that I'm talking about in this video. When you're using the Fibonacci tool, wait for price to show you signs of rejecting before you enter a trade. So we are going to use the Fibonacci tool to identify premium and discount zones. Typically, within the context of technical analysis, you apply a Fibonacci retracement tool between a significant low and a significant high on your chart. Then consider areas below the 50% retracement level as a discount zone and areas above the 50% retracement level as the premium zone. By understanding where the premium and discount zones are within the swing range, you can now determine the best areas to buy or to sell. Longs are high probability in a discount zone, and shorts are higher probability in a premium zone. So notice when I put my Fibonacci on my range, I went from swing high to swing low. When you're using the Fibonacci, you're going to always place it from left to right. Here is another example of using the Fibonacci to find premium and discount. In this example, this green zone right here is the discount zone. You see that it's below the 50% level of my Fibonacci, which is where that yellow line is at. And in the last slide, you guys noticed that the red zone that I had marked out on that chart was the premium zone. So you're going to use the swing high to the swing low. You're going to use the range that you identified earlier. Once you identify your range and you know what zone you're in, the next thing you're going to start looking for is order blocks or rejection blocks. Order blocks are areas where institutional orders accumulate. Price often retraces into these blocks before continuing in the trend direction. The midpoint or middle of an order block is a key level of an order and must be studied in order to become a master in reading price action. Now that we have identified our range, we have waited for a market structure shift, we're going to wait for the market to either go into a discount zone and look for buys or go into a premium zone and look for sales. In this example, we're focusing on sales because the market structure shift happened on a 30-minute time frame going to the downside. So notice in this picture right here, I marked out the order block for you guys that is in the premium zone. Once we identify our order block, we are now going to put a box on our order block with a dotted line going through the middle of the order block. This is a really important key tip because if the bodies of the candles are closing at or below that midpoint of the order block, it increases your chances of winning that trade. Notice how in this example right here, if you zoom in on the picture where the price first went into the order block, notice how the bodies of those candles closes below the midpoint of that order block. This is a real important thing for you guys to note if you're going to become a master at reading price action, because it is these small things that happen in the market that will give you so much information. After waiting for confirmation, seeing how the body closes at that order block, seeing if the body respects the midpoint of the order block, we then will take the trade. And we're going to put our stop loss about 10 points at the wick, right? The highest wick of the order block. That is normally how I place my stop loss when I'm trading order blocks. And then I just take the trade. And after that, I begin to figure out where should I be getting out of the trade at. Now, obviously, if you're getting into the trade inside of a premium zone, you want to look for something in the discount zone, something as a swing low or liquidity, right? Normally, a swing low is going to be the liquidity zone. So notice how this liquidity zone right here is in discount. So that is what I am going to target for my take profit. The last thing that we have to do, and this is a very important thing, you have to learn how to trust your stop loss and trust your take profit. This is going to take time for a beginner trader. It takes time and experience. Just taking these setups more and more is going to build your confidence. And even if you do not take these setups with real money or a funded account, just watching this happen in a live market is going to build your confidence as a beginner trader. Ideal times for scalping. Typically, you want to always try to wait for the New York session, which starts between 7 a.m. to 11 a.m. But you're going to most of the time find your highest probability setups from about 9:30 a.m. to 11 a.m. Avoid low liquidity times to minimize your risk. The first hour after the market open often presents the best opportunities for trading. So to wrap this video up, let's go over everything that we just talked about. We just talked about how to find great scalping opportunities using precision and patience. We focused on liquidity, market structure shifts, and confluence to make informed entries. Always manage your risk to the best of your ability, especially when you're on a prop firm account. If you're on a prop firm account, my recommendation is do not risk more than 0.5%. This is going to allow you to take losses without becoming too emotional. Lastly, always know what range you are in to determine whether you should be buying or selling the market, and then look for your order blocks and fair value gaps. Thank you guys for tuning in to this video. Be sure to leave a comment if you guys like this type of content, if you guys like the slideshow content, or if you guys want me to go more into live markets. Leave a comment down below. Don't forget to click that like button and subscribe to the channel. I appreciate everybody for supporting me. You guys are awesome. Until the next time, I'll see you guys later.